Welcome to everyone. I'm Carlo Jugovac, the head of the FinTech Efma FinTech Services. I'm very pleased to introduce you today the presentation, the first edition of the World FinTech Report made by Capgemini Research Institute. Today we have a fantastic partner and we want to present this report. Let me introduce one by one them. Elias Ganem, that is the Global Head of the Market Intelligence Financial Services, is the senior executive that is in charge of to create a bridge between the Capgemini clients and the FinTech ecosystem. He will present the insights and the financial and the study conclusion. Teo Lao, that is a public speaker, writer, and advisor. She's the founder of Unconventional Ventures, focused on developing and growing ecosystem with the financial institution, corporations, startups, entrepreneur, venture capitalist, and accelerator. And she's the guest contributor for many events and publications like our Business Review, MIT, Money 2020, Innovate, and others. She will present her experience and contribution to the study. Adi Sharma is the COO and the head of the products for Marcos Cards business. He's also lead the program manager for Apple Card program in Goldman Sachs. He will testify his experience in Marcos, the company that has been created by Goldman Sachs for the retail market. And finally, Colin Payne, that is the Capgemini Vice President and Global Head of Next Gen Financial Services. He has over 25 years experience within the international and digital financial services. He will give us the Capgemini view on the FinTech and innovation trends. So without any further delay, I leave the floor to Elias Ganem. Please, Elias, floor is yours.
Thank you so much, Carlo, and thank you everybody for joining us today. And along the day that we'll be together, if you have any question that you want to raise, feel free to put it into the chat, and I'm sure we'll have time at the end, and Carlo will be asking us the questions. So don't hesitate. Let me walk you through the FinTech report. First of all, we started this experience of doing the FinTech report 5 years ago because at the time it was something new. FinTech was building up. FinTech was a new way of doing business, but FinTech evolved very fast, and that's why this year the title of our report is Banking into the FinTech Era. FinTech is not anymore something funny or something new or something in the make. It is really at scale, and we need to make sure that the banking is adapting to this ecosystem that the FinTech has made. Every report that we do is supported by extensive customer as well as executive point of view. We have interviewed more than 8,000 customers around the world. We also interviewed more than 120 executives. We also made sure that we are quite connected to what's happening in the world through Finastra, Google, and AWS to make sure that we bring in exactly what's happening. But this year, more than all the customers or the different elements that we have seen, it's really the impact that we are able to get through a global executive steering committee. We brought together all the people that you are seeing, 18 executives from around the world, coming from North America, Europe, and APAC, but also being from the banks, being FinTech themselves, technology partners, VCs, business enablers, and as you could see, all the key brands around the world are represented. And today we have an immense pleasure to have with us Adi from Marcus, as well as Teo from Unconventional Ventures that will be with us and reacting to the report. But for me, it's important to showcase the depths of the report that we were able to gather thanks to the contribution of all these great people. So let's jump into it. And if we were to simplify where we are, and everybody has that in mind, it's time to act. There is no more time to relax, but on both sides. And it's time for the FinTech to move beyond popularity and get into the profitability agenda. The regulator is asking that, the investor is asking that, and the consumer is asking that, because all of profitability is stability and growth. But it's also time for the banks to beef up their journey and become a full digital bank. Why? Because now they are banking into the FinTech era. In the coming slide, you're going to see a lot of slides with green background, and it's our way to talk about the FinTech, and a lot of slides with the purple background, and this is on the banking side perspective for you to have the idea. So let's jump into it and start by saying, challenger yesterday, competitor today, will they be the leaders tomorrow? And clearly the fintech today are chasing profitability. And to get there, we have identified the way they've been doing it through 4 axes, being diversification, orchestration, monetization, and expansion. On the other side, banks we are observing it a lot, are ramping up digitization, and we're going to see it a lot with Marcus, that is quite around the report, how Goldman Sachs made it happen on their side. And banks are doing it through different approaches. And we call this approach the right field approach to build a digital bank, and we'll come to get into that. So let's jump into the green side of the presentation, on the fintech side of the presentation, and really 3 words to keep in mind. Disruption, 5 years ago. Popularity, the last few years. Profitability. From disruption to popularity to profitability, this is where we are when we look at the fintech ecosystem. Where are we here in the ecosystem? Look at that. Just by looking at some examples, this is not exhaustive by all means. You will get much more details into the report itself, but to give you a snapshot, this is some of the fintech around the world, where we go from China down to Australia. And we have shared with you the valuation of these companies in billions of dollars, 30 billion, 31 billion, 25 billion for Nubank in Brazil. But also we have put at the bottom the customer base. Look at that, 200 million for WeBank, down to 34 million for Nu in Brazil, Chime with 12 million, and Revolut with 12 million. And finally, what we have taken also is the idea of these are global players. And between the time we started the report to show you the activity of these players, Revolut exited Canada and entered India. How big is that? This kind of big move that usually only large bank can do, and now fintech can do. But while that was happening with the top ones, what we're observing also, pain started to appear. And I would call that pain that comes with the maturity of anything that happens. And we have seen 2 pains coming up: operational issues and financial implications. Rising expenditures and downtime when any startup become global, when they have different regulations, different languages, different currencies, where logically operation builds up. And we are observing that even the startups, the fintech, the neobank, whatever the right name for you it is, clearly we are seeing challenger banks are citing problems with their servers. We're also seeing fundraising in the fintech ecosystem. These big folks are getting a lot of the money, but what we're observing also is there is a maturity in the fintech. What is this maturity? We looked at compared early stage funding versus late stage funding. And what can we observe here? That while early stage was the biggest chunk of it in 2017, normal because it was a new ecosystem, now almost 40% is coming for late stage. That shows the maturity of the business and shows the opportunity for banks to either acquire, partner, invest, and we have seen it recently with Goldman Sachs investing in Starling Bank and getting into the maturity stage of the bank. So we had on our steering committee VCs also, and they really told us the VCs are looking for 3 categories of fintech. The one that are rebundling FS services. You've heard about the word super app. This is it, the rebundling FS. Diversifying from B2C to B2B and vice versa. Fintech started in a niche and now they're coming bigger and bigger. And more important now is being compliant. We've seen a lot of the regulators saying the fintech, the Revolut of the world need to be as compliant as the Dutch bank or the HSBC of the world, and ethical. So these are the pillars that we are seeing. And the last thing that profitability, the last element that the VCs are looking for is the famous profitability. And yes, as of today, most of the fintech, insurtech, and so on are not yet profitable. Though, if you look at the dashboard on the right, we are seeing more and more green. Tinkoff in Russia, profitable since 2008. WeBank in China since 2017. Starling Bank announced profitability in 2020. Revolut announced twice break-even, but is not yet profitable. Kakao out of Korea is. But that shows you the maturity of the ecosystem. So now challenger banks are focusing their growth strategy to evolve from the popularity, which is customer acquisition, into profitability and long-term plan. How do they do that? Well, they are doing it through 4 specific strategies. First is diversification, build and retain the customer base. Then moving into orchestration, build or join open ecosystem, monetizing now the customer, the data they have through increasing the customer lifetime value, and finally go beyond, expansion. Revolut is a fantastic case where they started in the UK, moved to Europe, split UK and Europe because of the Brexit, and now is expanding in the US, in India, and so on. So the route from maturity to profitability is about sustaining the competitive edge. What have we observed about all the fintech? We try to take the time to understand the blocks of their growth, and we want to share that also with the bankers to think about, as you build your digital bank, don't replicate the traditional model of what you were able to make in 100 years, but think about how the fintech are doing it in only much less years. So the first 2 years, and by the way, 2 years for a fintech is what took them to get to there. 2 years, usually in a banking environment, is what they ask them to be profitable. And no digital bank will ever be profitable in 2 years. So the first 2 years, it's about testing time. It's about disrupting a specific segment of the value chain and be into the customer acquisition. And in this case, they only go to price-sensitive customers, the one that are very reactive to the price and wants to be quickly attracted. But then what we've noticed is next 2 to 5 years, this is, we call it the adopting time, where it's about starting to expand. And here we move from price-sensitive customers to value-sensitive customers. And this is where we build the customer zone loyalty. That drives us to where we are now. For many one that you have seen that already green or turning green, is we call it the referring time. And we move from high-fly customer zone to build up customer zone loyalty to engage customer zone. And the target now are the loyal and the brand evangelist. If any one of you have one of the brands that I mentioned earlier, being Starling, being Revolut, being N26, and so on, probably you've been promoting it to your customers. How many of you have been promoting your traditional bank to your best friend or maybe to your best enemy? The question remains open, but people that has discovered the fintech 5 years back and remained became the biggest evangelist out of it. So when we move to the second step, which is orchestration, what can we see? If we took an ecosystem, we took the example of Starling because they are quite visible and quite transparent in what they do. Look at the ecosystem of Starling Bank. They are the fronting to the customer, but behind them or next to them in a white label or co-branded, they have a huge stream of partners. They offer payment through iSettle. They provide insurance services through SoSure, mortgage, accountings, wealth investment, loyalty, and so on. And behind each one of them is the ecosystem, the marketplace that one of the startups is giving them. But if we go deep dive into one of the elements of Starling, being Wealthify, we could see that Wealthify is also on the platform of others. Why? Because it's an open ecosystem where the way of doing business is really collaboration and orchestration rather than do it yourself end to end. And here we could see that Wealthify is also on Yolt by ING, but is also on TSB Bank, and is also on open platforms like the BOD one out of the UK that enables banking as a service for third party. So the message into the mindset of the entire fintech ecosystem when it comes to orchestration: co-innovate and co-promote, get you fast in the market and deliver the best experience. Then we move to the third step, which is really about the monetization phase. And here, what can we say? Well, monetization is about finding the best way to get the money out of our experience. Here, 3 models that we have observed. The ecosystem pricing. You've heard about Amazon, you've heard about Amazon Prime. This is the best ecosystem. You pay the subscription price that augment quite frequently, and customer base that never decrease. Why? Because the ecosystem become bigger and bigger. And I am talking to you today from France, where we're having Roland Garros, and Amazon Prime is the one promoting now through the Prime Video, the Roland Garros. So the expansion of the ecosystem makes them more and more, the relationship with the customers is bigger and the retention is higher. Bank as a service and partner pricing, monetizing core capabilities, data, lending, licensing, and that gives you a much faster way to use the ecosystem at a lower cost. And other examples, if we look at Bankable, if we look at Mambu, they are monetizing their platform and give it to third party, co-branded or white label. And finally, leveraging data and leveraging advertising pricing. That's a different way to see how the ecosystem is evolving, and Pled is a fantastic example where Pled started very well, was about to get acquired by Visa, did not go through, and now the valuation at Pled, thanks to or because of the COVID, went to the roof. Why? Because every single player on the world, being a fintech or a traditional player, wanted to engage with Pled and leverage their banking as a platform. So, and moving to the last step, which is about expansion, let's look at what has happened lately. We have seen Revolut moving from the UK, staying in the UK to cover the UK market, but moving to Lithuania to cover the European market. Oak North in the US, offering licensing capabilities to the entire network of their clients. And the very interesting example is N26. N26 said, I want to expand to the US, but rather than doing it myself, I will do it through partnership. And I will partner with Axos Bank, where Axos does the B2B for N26 and N26 does the B2C. And that's the best model where we're leveraging the capabilities of each one of them. But how to sustain the competitive edge in the new market? And here we have seen 3 elements that could block the situation: the cost dynamics, the culture, and the regulatory environment. When it comes to cost dynamics, it's always a trade-off between in-house versus outsourcing. Banks like to do everything in-house. Startups are a lot into the outsourcing up to a certain stage. As they grow, they move into more internalizing the knowledge and allowing the next frontier through an outsourcing model. Culture barrier, very interesting. N26, Germany-based company that in order to move to the US took a very local team to make it happen. And finally, we talked already about the Revolut that is into their local ecosystem in the UK and through Lithuania around Europe. So to conclude with this portion, what can we say here? While fintech are raising to profitability, they're also raising the heat for banks. 25% of the customers that we have interviewed are willing to try banking product from new age players, from fintech, big tech, retailers. Google is moving into this direction, so the Googleplex. We are seeing also the Asian players coming quite strong. So all that is showing that to the interest of the customer, the ecosystem is reacting. And 70% of the customers say that the fintech give them better service, faster delivery, personalization, swift resolution of query, anytime, anywhere accessibility. I had a problem today with my Revolut card. The card is already on its way to me, a replacement card, and it's arriving tomorrow. Please tell me any bank that could make that happen. But also, why customers are doing that? Specifically because high friction from the incumbent. What are the high friction they are seeing? Problem resolution. 33% of the customers complain of problem resolution problems with their traditional bank. Advisory-related services, collecting information time and time again, making payments, and so on. So what is very important, customer still trust their bank. 75% of the customer trust their primary bank for financial needs and advisory and plan to continue with their primary bank. 75%. Why? Because I know my bank, I've been with them forever. But what is happening, what we are noticing is I receive my salary in my primary bank, and then I use one of the fintech on my day-to-day spending. So my bank is being the custodian of the funding, expensive activity to do, by the way, and the KYC, while the other banks, the new age banks, are benefiting from the day-to-day transactions, being transaction fees and being data. And 68% of the customers would try a digital-only bank if operated by their primary bank. And clearly, there is a major opportunity for the banks. When we look at the right side of the screen, banks need to level up their game to leverage on their strengths, trust, while improving on their weaknesses, what we could see in the middle of this page. With that, we conclude the section on the fintech, where we are here to learn on how they did it. And if I remind you, their strategy to go from disruption down to profitability goes by building diversification, orchestration, monetization, and expansion. So let's shift gear and look on the other side. And this is the retail banking side. Leverage what you do well, i.e. history, brand, trust, customer data, and learn what you don't do well through the new mindset. And let's start by the data. A very important data point that we have seen, 86% of the customers, 86% are willing to share data, while 14 are not willing to share the data. And very interesting, with whom customers are willing to share data? 24% with their bank, 36% only with banks, 26% only with people that could tell me how to use it. So clearly, the banks have the upside when it comes to leveraging data. And how you do that? How banks should move into the way of building their bank, their digital bank? We found 3 ways. Greenfield, create a new entity from scratch under a new brand name using a completely new IT infrastructure and keep it separate. Here, 2 great examples, Pepper from Bank Lumi, or Now from Commercial Bank of Dubai. They create a completely independent one. Another way is the blue field. Create a new entity under a new brand name using a mix of existing and newly acquired capability. Nickel from BNP Paribas is a very good example. They started as a completely new age bank. They got acquired by BNPP, but they kept completely their brand, their operation, and they only relate on some activity. Marcus by Goldman Sachs, and we'll come back to it quite a lot in terms of the way they did it. The last option is a brownfield, building a subsidiary using existing infrastructure and capabilities built in-house. So whatever the way of doing it, do it. And whatever the right field you need to jump into it, do it and do it fast. When we say do it, we identify 3 ways of doing it. Take the time to define and to answer very carefully to this question. And the answer is not a me too. Like everybody else, I did it, I need to do it. Why to target? Where to target? Who to target? And how to target. Make sure that you don't do like anybody else, a copycat of something. And because if you follow a copycat approach, you will end up losing your customers. Develop your foundations with the right people, with the right infrastructure, and with the API mindset at the beginning. And go to the market by building an enabling culture, funded correctly. We have seen that it takes 5 years to be profitable. Understand that. And very important, and we'll come quite a lot about the word, accept cannibalization between the mother company and the digital bank that we are creating. So if we look at define, develop, and drive, we took to ground it on in the reality, we took 2 examples, Marcus by Goldman Sachs and Mox by Standard Chartered. Marcus in the US, Mox in Hong Kong. And we tried to answer the question, the why, the how, and so on. Goldman Sachs wanted to enter a new segment. Standard Chartered wanted to address the pain points of a specific population, the mobile first Hong Kong consumers. Where to launch they launched it in 2016 for Marcus, in 2020 for Mox. They focused on premium retail customers. They focused on tech-savvy retail customers. And if we move into the so what, and we look at 5 years later, 5 million customers, $97 billion in deposits, $8 billion in loans, $1.2 billion in revenue. If we look at Mox, only since December 2020, less than a year, what can we see here? 80,000 customers, 660 million deposit. Why you get these numbers? Because you answered carefully the why, the where, the who, and the what. So to make that happen, you need to think, when it comes to develop, into 3 building blocks. Build the digital foundation, deploy the cloud, make sure you use the right cloud, don't use the old way of doing business to the new one. Collaboration at scale, bring the mindset of always leveraging what is best outside. And how you make that happen? By hiring the right people. Don't use the same people that did your traditional bank to do your digital one. And if we move into the how, well, very important. The core that was created in the 80s gave you fantastic results until now. It was created 40 years ago, whatever is the time, but don't use the same core for the new bank. Build a new modern core. Build or leverage modern core. Why you need that? Because you need now to move into the cloud across the entire value chain from back to front. Get yourself into the internal APIs so you can grow much faster, and leverage external APIs to improve the experience. And by doing that, offer an experiential banking that will deliver an omni-channel experience to the customer. But very important, as you build it, make sure that you take care of you collaborate at scale. And we could see here that everybody is looking to collaborate with the startup ecosystem, and that's very important. And I would like to make sure also that we think about the people. Develop, bring in the right talent mix. Place yourself at the heart of the technology and go beyond banking. 3 examples that you will get much more into the report. Mox, through hiring folks outside. Marcus, coming with a very good mix-up of the people. And finally, in Vietnam, Tinex, hiring very different profile of people. So if you want to be doing it the right way, is think digital bank. And here, very interesting, we have a very positive feeling that it seems that 21% of the banks have already a digital-only bank. 57 are working on it. 22 will need to come to it. So I want to bring a big important point on this one. These are the problems that you could face as you build it up. Stay away from the copycat. We talked a lot about it. Get the right support and the right time, 4 to 5 years. Accept strategic cannibalization. Be willing to lose customers from the mother company to the new company. Clash of cultures, and build it and start going fast. The way to go forward with this schemes of right field, we have seen is build your core banking, build your back office, where you have the regulatory, the core banking, the back office, and the API layers. Build a middle office where you put in the function that goes across all the activity. And what you see on the top, onboarding, KYC, loyalty, account aggregation, branch network, leverage it as you want for different sectors. And you could go greenfield for the gig economy. You could go bluefield for the silver surfers. You could go brownfield for digital native. But be sure to identify your way forward. And that gets me to the conclusion of today's presentation. Really, moving forward is 3 important words. It's all about balancing between developing in-house versus outsourcing the banking stack. It's about building a digital-only subsidiary through the right field. And it's about driving long-term growth with sharp focus on the target and accepting strategic cannibalization. With that, I end here the presentation, and I'm going to invite Teo to join me today, and let's have a quick conversation on where we stand. So good to see you, Teo, back, and hoping to see you face to face anytime soon. How are you, Teo?
I'm good. How are you, my friend? It's been a while.
Indeed, it was, and soon in Money 2020. Teo, would you mind quick introduction about yourself in a minute, if you can, if you don't mind?
Sure. Yes. So I'm the founder of Unconventional Ventures, as was introduced earlier today. So we run a boutique consulting firm that helps startups look at their market strategy. How do they grow? We work with different communities looking at solutions around longevity, around gig economy workers and women. And at the end of the day is we want to make the ecosystem more interesting. We want to make it more inclusive in a way that serve more people. And recently, we just had this wonderful little project called Beyond Good, a book that just got released that talk about purpose and profits. So thank you for having me.
Wow, to see a physical book, by the way, yeah? Fantastic.
Yeah, I know. It's a labor of love.
It must be. Teo, my first question to you is, we saw the whole COVID-19, and the COVID-19 has been a sweet and sour experience for FinTech. We have seen most of FinTech verticals reporting good performance and growth. That's the good side of it. But at the same time, there have been operational and financial challenges as well. Investor sentiment has evolved. So a quite complex situation. Going forward, what will investors look for in FinTechs when making an investment decision?
Yeah, good question. As you mentioned earlier in the webinar, we've seen fintech funding that's more than doubled in the first quarter of this year compared to last. We had a lot of mega round funding, a lot of deal activities that's increased year to year. And as a matter of fact, I think according to one recent report that we have seen the highest level since the third quarter of 2019. One would ask, did the pandemic even happened, right? It seems like, you know, from a fintech funding ecosystem's concerned, things are just going and going. I think going forward, though, as you mentioned, we do see some changes, and there are some segments that attract people more than others. So ones that help employees access their earned salaries, right? We're seeing more fintechs that came out and say, well, you know, we're going to help you get access to your money instead of every 2 weeks, you'll get it early. We see fintechs that are working with employers, specifically in the United States, helping people pay back the student loans, which is one largest challenge with consumers in the US. We're seeing a lot of focus on gig workers, small businesses, because they are the backbone of economy. And we definitely see a lot of community-focused challenger banks, like what you touched on in the report. We have Daylight for LGBTQ, Cheese for Asians, Greenwood and First Boulevard for Latinx and Black communities. And I think another interesting play we're seeing is around data. What are we doing with the data? How can we be smart with that? So we see companies like Amex who not only connect financial accounts, but also help institutions analyze what data they have. How do you enhance it and create new propositions and experience for both fintech and incumbent? So it's definitely an exciting time.
And the journey is only, I think we're in a maturing phase of the fintech and the transformation phase where more and more banks are also stepping into the fintech, and either with a financial ticket as an investment, Goldman Sachs, Starling, or even acquiring them, as we're going to see. What do you think of that?
Yeah, absolutely. I think just this morning, HKMA, the Hong Kong Monetary Authority, had announced a plan and a path forward to get all banks to be fintechs, right? So I think the details of exactly how they can go about executing that remains to be seen, but I think it's definitely a path forward, is recognizing that you need partnership. You need, you know, to co-innovate together. I'm borrowing your words from earlier. We need to, you know, co-promote together. I don't think banks can do it all alone. I don't think fintechs can expand all by themselves. We need to create an ecosystem to help each other to grow.
It's impressive to see when the regulators comes with bankers, I want you to become fintech, banking in the fintech era. That's exactly what we're talking about it here. One last question for you. Would love to get your point on the ecosystem banking. One of the items that we've been talking about it is diversification, orchestration, monetization, expansion. Orchestration is about the ecosystem. Could you tell us how should fintech approach ecosystem banking and what should be their focus area?
That is a billion-dollar question, my friend. I think I like to look at the Asian market as an example, right? You touched on WeBank. So look at Ant, look at Tencent, look at Grab and Gojek in Southeast Asia. These are all very formidable players that they each start out to solve one specific problem. For example, in Southeast Asia, they try to solve a logistic transportation problem. And they all start to evolve and not only grow exponentially, but they also enjoy a very, very active user base. And so when we look at how is it that these fintech, or I wouldn't even call them fintech startups anymore, they've grown so big, how do they manage to grow and expand? How do they get people to stick and use their app all the time? And it goes back to the two questions I always ask people. What are you doing? And who are you serving, right? It goes back to a thesis that we believe in, and we see it in the growth of a lot of the companies, is what is your purpose and profits? Because they do coexist. And we find example after example. You look at Ant, you know, a lot of times we look at them as a QR code payment company, but it's way more than that. They have the Ant Forest program that helps gamification and using behavioral economics to help people grow and adopt a greener lifestyle. You see, you know, and they also help with financial inclusion, helping small business owners get access to loan. You have even banks, right? In the US, you have certified B Corp like Sunrise Banks that does an amazing job serving immigrant population. So in the end of the day, it's, you do know you can make money, you can do well while doing good. So do that and ask yourself, what do your customers want?
Fantastic. Thank you so much, Teo, for your thoughts, and thank you so much for joining us from the US. Thank you.
Thank you so much for having me.
Have a good day. Bye. Bye. And now moving to Adi, we've been talking a lot about the Marcus versus the Goldman Sachs. Adi, how are you doing today?
I'm doing great, Elias. Can you guys see and hear me?
Loud and clear. Thank you so much.
And
Adi,
thanks for having me.
A quick introduction about yourself. Quick start on that.
Yeah, I'm the founding member of Marcus by Goldman Sachs. I have worked through the journey of different products that have evolved in the business. And today I manage and run the Apple Card program for Goldman Sachs.
That's nice place. Fantastic learning place for me in terms of how an experienced producer of the iPhone comes to work with a bank. And that brings me to my first question. More than 150 years of servicing only high net worth individuals and advising top corporate houses. Goldman Sachs has a very strong positioning, but Goldman Sachs after this time decided in 2016 to enter new territories, consumer finance. What was the trigger for such a change? And where do you see Marcus in the next 5 years, let's say by 2025?
See, I would say there were three things that basically triggered this move. One, Goldman had to get a bank charter in 2008, and we had to put that asset into work. And the way you put that asset into work is to start issuing consumer products. Second was, as you said, around 5 years back when the idea of Marcus by Goldman Sachs started, was where the digital finance and the fintech market was booming. So at that point, it was the right place to put our money for the best outcome for our shareholders. And number three is, at that point, Goldman was in a very, very strategic placing where we did not have a old technology stack or a business that we would cannibalize. We had a very strong governance and strength of the risk and control functions of the bank, and we had the balance sheet of Goldman Sachs backing us up. So all these 3-4 things put together, I think, resulted in the start of Marcus by Goldman Sachs.
I love the structuring of it and building the blocks to get there and make it work, make complete sense. If I were now to fast forward 4 years to now, to Q3 2020, quite recently, Marcus onboarded more than 5 million customers with more than $92 billion in deposits. Staggering numbers. A key enabler factor in making Marcus successful was the digital platform. Everybody talks about the Marcus digital platform. Could you shed some light on how Marcus leveraged digital technologies to power its banking platform?
Yes. See, before I go there, I would say that the key factor for the growth and the numbers that you just said is the simplicity, transparency of the products that work for our customers. So, serving our customers and being the right market fit is most important. Our platform is new, and we use it to distribute our products through inorganic or through partnerships with our partners. Mm-hmm. So, there's a value we have that our stack is completely microservices built and leverages a lot of partners around the ecosystem, which helps us enable the features and the functionalities that we need, whether be it through a direct distribution or through a BaaS offering that we do with our partners.
And that gets you into the growth of the market. So if I were to look forward, you already done a partnership with Apple and with the Apple Card success out of it. Would love to get your thoughts on the big tech ecosystem. Competition in the retail banking sector is expecting to intensify further. We are seeing every big tech doing something. And the best example is the Googleplex services. But we are also seeing retailers, Walmart announcing its own fintech, retailers entering the digital banking foray. In your opinion, what are some of the factors that will enable Marcus to succeed in such of a competitive market?
See, I feel that growth in the marketplace is always a good thing. And this further validates the long-term strategy that we have in terms of the vision for Marcus. Now, most of the big tech will need a modern banking platform that can support their offerings. And we have reputed partners and proven track record that we can do that. So the entire evolution of how a lot of adjacent players want to come into the fintech space works well for us because we are in the heart of it and we have been able to do it multiple times. So I see this place as an enormous opportunity, as we can provide these new players the regulatory knowledge, the balance sheet knowledge, and a way to profitability, because that's one of the biggest challenges that I see the fintech space has today.
Fantastic. Banking as a service, enabling anybody to do banking, leveraging what you do best, and the pie is here to be shared. I love that. Yes. Talking about pies and talking about collaboration, that would be my last question to you. Following up on the previous question when it comes to collaboration, Marcus is an outcome of several collaborations since 2015. You've been very clear on that from the beginning. We are expecting more collaboration and more acquisition in the future from Marcus, as it would reinforce its market position. What is Goldman's plan to drive Marcus growth organically and inorganically to remain relevant as well as resilient?
See, like I said earlier, our plan is to distribute financial products that are right for the customer. Now, we are 100% committed to our mission to put industry-changing products and services. Now, staying true to that mission, we have to grow through organic distribution and through the distribution of our partner channels. I feel our resilience again comes from our depth of risk management practices in the firm, our knowledge as we grow and partner with firms like yours to help us harden our platforms, make sure that we are building and scaling the business in the right way, and keep investing in our business controls infrastructure. If we can keep doing that and stay true to our mission of serving our customers the best, I think we are on the path of massive growth.
And just by looking at the numbers, you are on the right path. So yes. Well done. And thank you so much, Adi, for joining us today. Thank you so much. Have a wonderful day. Thank you. Marco, the floor back to you. Or shall we move straight to Colin? Colin, take us from here.
I'll pick up, Elias. Hello there. Great to see such great guests. Elias, you've done a fantastic job bringing this together. Thank you. So what we want to just talk about is how Capgemini are now thinking about helping in this next generation. We've for a couple of years looked at next generation financial services with a very clear lens. And it really boils down to those three things you've heard a lot about today. We've talked about platform, and we believe that that kind of progressive architecture, Elias spoke about greenfield or bluefield, it's absolutely essential to have a good, solid platform on which to build. And of course, you know, we enjoy working with our clients to create those opportunities in technology. The ecosystem you've heard about almost non-stop, because of course it speaks to the whole point of FinTech and how FinTech is going to join with previous incumbents and also collaborate as we go into the future. And I think we're looking at a future of almost invisible financial services where ecosystems will engage across entire marketplaces and platforms and access the needs of those customers through very, very simple engaged services. So back to the point we were talking about earlier, where what does the customer need? That big fundamental question. Well, we should be looking at that in terms of an ecosystem play. And from a Capgemini point of view, to realize those ambitions, when we ask those questions, we have a real interest in creating those new services. So the new commercial, the new operating models. I'm personally a great fan of Marcus, so it was lovely to hear from Adi on the Marcus story, something that I've been very close to since its inception. But these were based on the clever decisions back 4 or 5 years ago, and focusing on what a customer needed and a great simple commercial model to deliver that message to the customer. And that's why you get the great numbers on acquisition, because of course it's a combination of beautiful, simple digital services and of course a great product at the end of it. So moving on, Elias, we call this inventive banking, and it's a way of describing how we bring together the sides of the businesses together. We bring our clients, we bring FinTech, we bring technology, and we bring them together. Now, just a little bit of extra knowledge, really. This is our view of 2021 into the future. These are keys to success as far as we're concerned. There are 3 very simple structures here. First of all, customers are going to be looking to personal services. So the ability to design hyper-personal services, the experience that is, doesn't necessarily have to be a personal product, because some people will talk about you know, the segment of one. I think it's worth having a debate as to whether segment of one is a relevant issue, but certainly personalization of the experience through the networks, through those kind of marketplaces, and the delivery of services is absolutely critical. And as a business, we obviously work with our colleagues in Frog. We bring strategic design thinking. We can obviously start to personalize services through prototype. And we have an expertise in data, which allows us to then use those insights, hyper-personalize the experience, and use open banking and OpenX and the future of open data to make those experiences really personal. The second structure is around optimization. So how we execute disruptive and incremental innovation. It's something that a lot of our clients are, to be fair, struggling with. It's difficult to innovate in this market. So can we help you collaborate on new flexible platforms to really quickly and at low cost optimize what you have, whether that is looking at a greenfield opportunity or a bluefield, or indeed just looking at new products and features. Again, we have those services that we try to offer wherever we can. And for us, the opportunity to move towards a real AI solution, which we call augmented relationship management, is really something quite exciting. So we step towards progressive architecture, concierging of the FinTechs, then we create the journeys that are completely event-driven, and then we try to augment with AI. And the final we're focused on is sustainability. We really are the champions for green business now. We want to support this in real terms. We're working with a number of our clients to help all of us move towards those environmental challenges and try to answer them. Because again, going back to that thing, what does the customer want? What do they need? Well, most of them are saying to most of us when we're talking to them, look, we need to be more responsible. Look at those green propositions. How can we, as banks, create those propositions that are going to make a difference for the world? And the final slide, Elias, I'm going to just end on the next slide, if you can do. Thank you very much. The way we structure this is really important to get across that we try to work from the vision to impact. So I know that when Elias was talking to our guests, they were talking very much about purpose to profit and the balance between the two. We believe, we've got a real conviction that actually the vision that you have right at the front end to build that business should be linked directly to the measurable and tangible impacts that you have. Now, whether that be growth, whether that be loyalty, whether that be profit, this is the clear link. But to get there, the path has to include both business and technology. And I dot them together because often they're considered as silos, and we often work with our clients and they are in an operating model which has those as silos. Our conviction, again, is very clear. Bring those silos together, bring them to work together as you would in a big tech. Some of the lessons we're learning from FinTech, some of the lessons we're learning from big tech is to build this in and optimize both business and technology. We work with both, so we believe we give a really good backing for this. And this approach is really works in practice. So these are very practical ways we can work together. So with that, I mean, that's really a little bit of a run through on where Capgemini find themselves, because obviously we're finding our feet as well. This is a new business for all of us. So I welcome the chance to go into Q&A, and I'm going to pass the mic back to Carlo, who can just guide us for a few minutes on Q&A. I think we've got about 8 minutes left, which we're on time for, I think, Carlo. Back to you.
Yeah, thank you, Colin. So I don't know if from the audience there are any question. I don't see in the board in this moment, but I have many questions. Can I shoot one, Elias?
Please do.
Okay, so this is the first is for you. So you said that 25% of banks are already in the process of doing an online banks. No, that is quite a huge number. But apart from Marcus, that was not really an incumbent. But can you, let's say, show a successful example of these online banks from incumbents? No, because of course you know that incumbents have some limitations, some constraints, etc., etc. Would be interesting to understand, because the most successful cases are always fintech. You know, can you cite example of banks that are doing well?
I think it's a very pertinent question because there are not so many of them. I agree with you, and that's very interesting. I'm bringing back the slide for you to the one that we referred to. We said, in fact, when we surveyed the bankers around the world, we got the positive surprise that 21% of the bankers said that we already operate a digital-only bank, and 57% of them said we are building or planning to build a digital bank. 22% are not planning that. But the main message here, 2 comments. One is what you see at the bottom of it. A digital app does not mean a digital-only bank. And here, to your point early on, we're not talking about an online banking. We're talking about a digital-only bank, where the only way to deliver the experience is through digital. What we are observing a lot is we have all the banks, the top tier banks, created an online version, created an app where you could do some banking. The biggest challenge is you can't do the entire experience digitally, and you cannot relate, if you go back to your website or to the branch, the same experience. And for us, a digital-only bank is a completely, you can get everything done, whatever the channels you are being asked for. So on top of Marcus, that really the number that we have seen earlier on as quite impressive, the one that we are able to identify is really our friends from MOX, Standard Chartered out of Hong Kong, were early stage in the bank, but clearly already showing very good results. And the answer is why, in fact, why they are doing that, because they took crazy time in answering the 4 questions on the sites. And here I want to bring an alert to every single banker executive that is listening to the call today is don't try to do new with old. It's not because your digital bank failed yesterday that it will succeed tomorrow. It will probably fail as well. Make sure that if you want to create a new digital bank, you learn from the one who did it. You learn from the fintech. You hire the right talent. And more important, you do not use the same core banking that you have used before. And for me, the core banking is really essential. And this picture, I want you to keep it in mind. Move to a modern core, fast track cloud deployment, maximize internal APIs, and leverage external ones. This is the recipe of success.
Yeah. There is a question coming from the audience. So, does exist banks that can stand against the digital banks are coming? And do you think there is a model for somehow a traditional bank or multi-channel banks, but not a digital banks, to stay in the market and live successfully?
So we do see it a lot. I can tell you at Capgemini, every single day we are approached or we are already working on many digital banks from every single traditional bank. But bankers looked at the fintech ecosystem 5 years back of saying, another wave of funky stuff, it will disappear before we got any problem. And the reality is not there. And COVID only accelerated the digital bank. We, in the recently released World Retail Banking Report, we talk a lot about the future of branches. Branches is not, first, there will be much less. Second, they will be much more technological. And third, there will be much more community. So the role of branch is quite different. Now, to answer your question, every single bank is working on their digital bank. And based on our experience, that's how we came up with this concept about balancing between in-house and outsourcing. Please don't do it completely in-house. This is all time where you do everything in-house. You don't have the right talent, you don't have the right money, you don't have the right knowledge to do it. Outsource, leverage, go with an ecosystem. Build it with the right shore, finding the right activity that you're going to, the right field, with being green field, blue field, or brown field. Learn from that. And finally, get the money behind it. What scares me most in every executive meetings I went to talking to bankers is they say, how can you make sure that my digital only bank will be profitable in 2 years? And my answer is no, it will not be. Understand that. And last message is what you could see at the bottom right of the slide, accept strategic cannibalization. We have seen several banks that we present quite a lot into the report that launched their own digital bank only to kill it 2 years later because the mother bank was not willing to accept that customers would leave the mothership to join their digital only bank. So strategic cannibalization is at the heart of success. Long answer, sorry for that, Carlo.
Yeah, another question for Adi about Marcus. No, we talk a lot about the infrastructure, IT, core business, core banking, etc. But what about the talent? How to manage the mix of the people coming from external, from different experience, etc. Because also there is a technology somehow to merge these people and avoid cultural clash, etc.
See, it's an experiment. You know, we have done multiple versions of it. You get certain things right, you don't get certain things right. But the way we have initially structured the talent was, you know, kind of 1/3 of the people were from internal Goldman Sachs who understood the inner workings of the bank so that the integration between the new venture and the bank was smooth. 1/3 of the people were from other consumer banks who could help us figure out the consumer operating model. And 1/3 of the people were from FinTech or Big Tech who could help us stay focused on the technical and the platform side of things. So we made sure we took care of these three things. But I would say at the end of the day, all that could be in different proportions. All that could be a different set of combinations. The love towards your customer and your employees is the key. If an organization can demonstrate that, you know, you can hire people from different sectors, different mixes. If you love your customers and you love your employees, you will be successful.
Mm-hmm. Thank you, Adi. I have another question for Teo. Teo, are you there?
Yes, I am.
Thank you. There is a question. It's about who will benefit more for the open banking ecosystem, the startups or the fintech in general, or even the tech company or the banks, or both?
All of the above, I would say. If we look at how things have evolved, right? Clearly, you know, the fintechs have benefited a lot from being able to get access to a lot of different data to be able to orchestrate, create different value prop. But I think banks too, right? Banks can leverage the fintech solution and the creativity and help them grow and give them new ideas and kind of push them a little bit to do better. So, and obviously the last 2 years, we've seen a lot of discussion about big techs. What do they do, right? What is Amazon going to overtake banking, or lately Google? I think it's going to be really, really interesting. At the end of the day, though, I think consumers are going to benefit the most, customers, right? To be able to get a more holistic view of their financial lives and to be able to hopefully get to a more stable, secure financial future. That's what I would hope for.
Yeah. Thank you, Teo. Thank you, Elias. I think we are on time, on budget, as normally we say. It was very, very interesting to listen to you and to the insights you gave to the banks. Very strong message, because saying to banks that they need to start up a digital bank is really strong message. On the other side, it was clear that first or later the profitability problem will come out with the fintech, but we start seeing example of they can succeed in doing that. So very, very interesting, and I leave you with the opportunity also to get more insights reading the full report. So thank you very much from Efma team, and thank you for all the Capgemini team that organized all these presentations, and see you next time in the next days for other events that we are going to organize. Thank you.
Thank you. Bye-bye.